it's expensive to build flex. It's really expensive, right? And so, to make it pencil, you got to find the right site, right, where you really can you're going to build it on a smaller site, right, that allows for it at the right land basis, because it's so expensive to build.
So expensive to build. But I thought in 2022, obviously COVID, when the market got down to 3.8, I think it was.
Yeah.
Flex was sitting at about 4, which was the same number when in 2005, 6, 7, 8, when they were building new flex again.
Yeah.
I thought we were going to see it and we didn't.
Mhm.
And now it shot back up. So we're probably not going to see it.
Welcome to our Industrial Advisors podcast. We have a 5-minute Friday today. Today's topic is going to be about flex and defining what the flex market actually is.
The F word.
Yeah, yeah.
So flex properties are typically smaller bay stuff. I would say 3 to say 10,000 feet, 16 to 18 foot clear. I don't think I've seen a flex property taller than that. And then they're typically only drive-in, only grade level, no dock high doors. And then I would say beyond that, a lot of them are on roads with high traffic counts and exposures because of the type of tenants that enjoy flex properties.
Yep.
So I would say that defines flex.
Yeah. There's a lot of those projects that were kind of built out in like the 80s, so you think of some of the projects that are down there. You have West Valley Business Park, Springbrook,
Cumberland,
Davis Commerce. There's a bunch of those, Walker, Cedar River, and those are the newer ones. Those are the newer ones. So let's talk the newer ones that have been built. And we say newer, I mean, those were built kind of early 2000s, right? 2004 to like 2008.
Yeah.
And so you have Walker Business Plaza, Cedar River, and you have Oaksdale Commerce Center. And those projects all did well leasing up, but no one's really built since then.
No, the interesting thing to your point is it's been almost 20 years since the newest flex projects have been constructed, right? Yep. And why is that? So if we talk about the history of flex over the last 20 years, it got down to about 4%, which is why Oaksdale Commerce Center built those two, W1, W2, I think it was, and then Walker, Cedar River built, and then the downturn hit in 2009-ish, and that got hit the hardest. So we went from a 4% vacancy to a 22% vacancy in flex. And the reason for that, as I recall, is you've got a lot of smaller credit tenants that can't take those hits. So they went out of business and we saw a big vacancy in flex, right? Especially B.
Yeah.
B grade.
Yeah. The A stuff actually performed relatively well.
Yeah.
But certainly in the past, when you would go through a downturn, those would be kind of the first groups that would go. Yes. Because they don't have some of the credit that
they don't
some
have
of
the
our
bandwidth.
startups.
Yeah.
But overall, I would say the flex market has performed well over the years. There just hasn't been a lot of new constructions. You think of some of the owners that own flex in our market, they've done well. Harsh has done an amazing job. Schnitzer is now what they go by, but they have done a fantastic job. They just bought a couple new flex projects. TA has owned some really good projects. BKM has done well on the West Valley stuff.
Yes.
Jeff Davis has done great on the acquisitions. He bought Cumberland years ago, and that's performed really, really well.
And then he's always owned that one on 220.
Yeah, Davis Commerce Center. Yes. Yeah. So the owners of flex like it, but it's not for everybody because it's really management intensive.
It is. Well, it's lower credit. It's management intensive. And then I would say typically your downtime's a little bit more, especially if you're class B flex, right?
Yeah.
That can be tough. And then your TIs are a lot more, right?
Yeah. So they can be. But sometimes, you're just plugging, you're getting the group that comes in and they need space next month and they want to do a 1 or 2 year deal and they just jump into the space and they don't need anything.
That's right.
So the question is, it's that flex market sits at just under 8% vacant right now.
Which is lower than the market, right?
Slightly lower than the market in general.
Sits at 8.3.
Yeah.
Yeah. So when to build, right?
Yeah, I mean, it's expensive to build flex. It's really expensive, right? And so, to make it pencil, you got to find the right site, right, where you really can you're gonna build it on a smaller site, right, that allows for it at the right land basis because it's so expensive to build.
So expensive to build. But I thought in 2022, obviously COVID, when the market got down to 3.8, I think it was,
Yeah,
Flex was sitting at about 4, which was the same number when in 2005, 6, 7, 8, when they were building new Flex again.
yeah,
I thought we were going to see it and we didn't. And
hmm,
now it shot back up. So we're probably not going to see it.
yeah,
Right. But it didn't happen then. Most developers, to your point, were so focused on big box.
right.
Right. And a lot of the developers that were doing Flex years ago are not now. Right.
Yeah, so your buying pool is a bit more limited. I
That's
do
right.
think that it would be if you have a long-term approach on it and you're buying it in the valley somewhere, it would do well long term because
The yield's better.
you don't
Right.
have competition in the sense of like the last projects that were built in, call it 2008.
Yeah.
And so you're the newest product in town and you likely will be, there's not going to be a new bunch of competition in the flex space, right? So
Yeah.
so if you really had like a 20-year approach on it and you just wanted to build a project that's going to be successful for, the long haul, I think it would do well. It's so expensive to build, so you have to get over that initial hurdle.
Yeah, I do too. And to your point, there's only the newest ones being 20 years old. There's almost never vacancy in them. We've had Cedar River. I mean, I can't remember the last real vacancy we've had. It's been a while.
Yeah.
Right. So we've had ones we've advertised as people are moving out and we immediately lease it up. So the demand on A is there.
Yeah.
Even though the vacancy is 7.9% below market, that's almost exclusively in B and C grade properties.
Yeah. I mean, the right play for Flex is a kind of family owned, local, hands on investor,
For sure.
long term hold.
That's right.
That's the play. So
Right.
Flex is doing well, and think it'll probably have a decent year this year in 2025.
Agreed. Happy Friday.